It is Wednesday, 4th of February, 2026. Hello everyone, RateScope back again with another important update. Insane recovery in precious metals. Gold is now up 15.62% from Monday lows, adding $4.74 trillion to its market cap in just 48 hours. Silver is now up 26% from Monday lows, adding $1 trillion to its market cap in just 48 hours. Nearly $6 trillion has been added back to precious metals in 2 days. Gold prices rose by nearly $700 per ounce from Monday's lows. Gold is up another 3% today to reclaim the $5,000 level. But here's what's happening behind the scenes that nobody is connecting. Silver is vanishing fast. Another whopping 5.9% of silver out of the vault in only 1 day. And in China, a large amount of money poured into banks to purchase accumulated gold, resulting in the inability to log into bank apps. Gold prices dip, retail rushes in, bank apps crash. People are locked out from buying physical gold even when they want to buy the bottom. Quick note for my new viewers. This channel has not and will not ask for money in any form. Anyone doing so in my name is a scam. This channel is founded on factual analysis, not some repackaged hype that the copycats are selling. If you are looking for hyped analysis, do check out the copycats who will spin my words into another bank crash. Truly hilarious. My team is running out of banks that have crashed in 2026. Funny, yes, but unfortunately not factual. I only operate under the handle @RateScope on both YouTube and X. Now, let's get back to our analysis because this is not about price, it's about access. What's happening in China right now matters. Paper price says, plenty of supply. Reality says, sorry, system overloaded. Price suppression, sudden retail demand, access restrictions, delayed settlement, technical issues. And every time it ends the same way. Physical disappears first, price adjusts later. Young buyers in China aren't being smart money or dumb money. They're simply reacting to uncertainty and choosing tangible assets over promises. And when even bank-distributed gold products become hard to access, that's not a bug, that's a signal. Current prices as I'm recording: Silver Western spot at $90, Shanghai spot at $104, Shanghai futures at $101, Shanghai premium $14, 16% premium, gold at $5,050. Now let's connect the vault data to the recovery. COMEX Silver Depository Report. Another 2 million ounces withdrawn from COMEX Silver Vaults Monday, 35,000 withdrawn from Asahi, 1.1 million adjusted out of Brinks, registered, 400,000 withdrawn from HSBC, 1.2 million withdrawn from JP Morgan. Total COMEX registered silver down 946,000 ounces to 103 million ounces. Total COMEX silver down 1.84 million ounces to 43 million ounces. 5.9% of silver out of the vault in 1 day. 2 million ounces withdrawn Monday. This is not speculation. This is documented vault drainage. And it's happening while $6 trillion is being added back to precious metals market cap in 48 hours. The paper price is recovering, but the physical metal is leaving the system. Paper and physical are moving in opposite directions. China update, pay attention. Silver price is up double digits in RMB. At the same time, vault inventories are draining. SHFE, minus 26,412 kilograms in 1 day. SGE, minus 11,295 kilograms in 1 week. That's not speculation. That's physical metal leaving the system. Paper markets talk. Vaults tell the truth. When price rises and inventories fall, the message is simple. Supply is tight. Demand is real. Delivery matters. This is how paper pricing breaks. Quietly, then suddenly. Now here's the geopolitical context that's accelerating this. Today in Washington, the Trump administration hosts the inaugural Critical Minerals Ministerial, a high-stakes summit with over 50 nations uniting to break China's grip on essential minerals. With Vice President J.D. Vance, Secretary Marco Rubio, and top officials leading the charge, this emergency gathering signals massive government support for diversified supply chains, especially for silver, now classified as critical. Just days ago, President Trump rolled out Project Vault, a $12 billion strategic stockpile for critical minerals, backed by $10 billion from the Export-Import Bank, plus private capital. It's like the Strategic Petroleum Reserve, but for metals vital to defense, tech, and EVs. Mine, baby, mine. This creates a buyer of last resort to shield U.S. manufacturers from shortages and foreign leverage. Silver's official upgrade to critical status, added to the USGS 2025 list of critical minerals, puts it in the elite group for its role in circuits, batteries, solar, semiconductors, and medical devices. This unlocks federal incentives, faster permitting, priority and national security strategies. No more viewing silver as just a precious metal. It's now a strategic asset in America's America First playbook. The geopolitical push, ditching China's dominance. China's export controls on rare earths and other minerals have raised alarms, prompting friendshoring with allies like Australia, Canada, and the EU. Side meetings today, including Rubio with South Korea and India, aim to seal bilateral deals and frameworks for sourcing and processing. Over 50 nations are signing on to non-binding cooperation, mobilizing capital, speeding projects, and identifying priorities fast. Shanghai open interest in silver has completely collapsed. All the hot money has been flushed out. Gold open interest is extremely low. The gold price has held up pretty well. This is the washout completing in real time. There are no speculators left. All that's left is the banks covering their shorts. The whole COMEX is being abandoned. At least the shorts are. But there are no longs left to sell to them, and they're trading their short positions like hot potatoes. Something's going on. Something very big. Silver physical market is extremely tight. During the silver mass sell-off, all paper shorts on COMEX found buyers who demanded physical delivery. This is extraordinary. Normally only 1 to 3% of contracts result in delivery. The silver sell-off was used to accumulate physical silver. Let that sink in. The crash wasn't retail panic selling. It was accumulation. Physical buyers stepped in and demanded delivery while paper crashed. This is evidence the squeeze is real. Dubai silver shortage as buyers pay 15% premiums. China bank apps crashing from gold demand. Vaults draining 5.9% in one day. COMEX withdrawing 2 million ounces Monday. Shanghai open interest collapsed. No speculators left, only banks covering shorts. And $6 trillion added back to precious metals in 48 hours. The paper flush created the physical accumulation opportunity. Now the recovery is underway, with far less open interest and far tighter physical supply. Ray Dalio warns the world is on the brink of a capital war. Trump hosts 50 nations for critical minerals cooperation. Silver officially classified as critical for national security. Project Vault's $12 billion stockpile launched. This is government's positioning for what's coming. When governments classify minerals as critical and launch strategic stockpiles, they're not doing it because supply is abundant. They're doing it because they see the shortage coming and want to secure access before it's too late. Now let's address the risks, because Japan's bond market is under serious pressure. Demand for Japanese government bonds is extremely weak. The bid-to-cover ratio for 10-year bonds fell to 3.02 at Tuesday's auction, below last month's 3.3 and the 12-month average of 3.24. This reflects rising reluctance among investors ahead of a snap national election on Sunday, February 8th. A victory for Japan's ruling bloc would allow Prime Minister Sanae Takaichi to push further fiscal stimulus, which could significantly raise the government's debt burden. As a result, the 10-year bond yield is up to 2.26%, near the highest level since 1999. On Thursday, another key auction of 30-year bonds is scheduled and will be closely watched. The Japanese bond market is under serious pressure. This is the carry trade unwind continuing. If Japan's bond auctions fail, if yields spike further, that creates global stress. U.S. Treasury yields follow. Everything sells. We've seen this before. The initial reaction is risk off. Metals get hit with everything else. But then the safe haven bid returns. We're in the recovery phase now, $6 trillion back in 48 hours. But if Japan's bond market breaks, more volatility is coming. Trump says talks are still ongoing with Iran. No one wants a repeat of Midnight Hammer with Iran. Geopolitical tensions remain elevated. Any military incident triggers immediate selling, followed by safe haven flows. The volatility isn't over, but the physical market is tightening regardless of paper price action. Silver ETF demand has recovered. Open interest has collapsed to multi-month lows, historically a sign that forced liquidation is largely complete. Dubai reports 15% premiums. China bank apps unable to handle gold demand. Vaults draining 5.9% daily. COMEX withdrew 2 ounces Monday. Registered silver sits around 103 ounces. The physical market is showing tightness while paper recovers. Gold has reclaimed $5,000. Those who entered short positions during last week's crash are now underwater as prices reverse. Bitcoin is currently below 76,000, which values it at roughly 15 ounces of gold. That's down from its peak ratio in November 2021. In gold terms, not dollar terms, Bitcoin has declined significantly. The recent volatility in paper markets has coincided with visible tightening in physical markets. So where does this leave us? Number 1. $6 trillion recovered in 48 hours. Gold up 15.6% from Monday lows. Silver up 26%. This is one of the fastest recoveries from a forced liquidation we've seen. But the physical market is tightening while paper recovers. 5.9% vault drain in one day. COMEX down 2 ounces Monday. Registered silver at 103 ounces. China bank apps crashing from gold demand. Dubai, 15% premium. Physical disappears first, price adjusts later. Number 2. Trump hosts 50 nations for a critical minerals ministerial. Project Vault, $12 billion strategic stockpile launched. Silver officially classified as a critical mineral for national security. This means federal incentives, faster permitting, priority in defense and tech supply chains. When governments classify materials as critical and build stockpiles, they're saying supply risk is real. Ray Dalio warns of a coming capital war. Governments are positioning for what they see ahead. Number 3. Shanghai open interest collapsed. Gold and silver OI at multi-month lows. All the hot money flushed out. No speculators left. Only banks covering shorts. During the crash, paper shorts found buyers who demanded physical delivery. Normally 1 to 3% take delivery. This time, significantly higher. The sell-off was used to accumulate physical. That is extraordinary. Japan bond auctions are weak. Geopolitical tensions with Iran ongoing. More volatility is possible. But physical fundamentals are overwhelming paper manipulation. The unresolved tension is this. $6 trillion recovered in 48 hours, but vaults draining 5.9% daily. China locked out of buying through bank apps. Open interest collapsed. 50 nations meeting on critical minerals. Is this the start of a sustained rally back to all-time highs? Or does Japan's bond crisis and geopolitical risk create one more wave of selling before physical shortage forces the final breakout? The paper market says recovery. The physical market says shortage accelerating. Both can't be right long-term. Do your own due diligence. Understand the risks. Japan's bond market is under stress. Iran tensions continue. Volatility isn't over. But 5.9% vault drain daily. China apps crashing from demand. Dubai, 15% premium. Open interest collapsed. Banks covering shorts. Physical delivery demanded during the crash. These are not normal conditions. Watch access, not headlines. If you can't take delivery, you don't own anything. Invest with logic, not hype. Use your own brain. Don't trust anyone blindly. RateScope out.